Oh, I'm definitely open-minded about what the right level of the federal funds rate target is to have appropriate monetary policy. At the moment, I think appropriate monetary policy is just somewhat under the neutral rate so that we are providing accommodation. Just at the end of last year, 2018, I thought that appropriate policy was headed towards slightly restrictive stance of policy because unemployment was at a very good falling rate. Inflation looked to be picking up to 2% and perhaps beyond, and the economy was very solid. But since then, over the last 6 months, we've had more challenges getting inflation to 2%. There's been more uncertainty. Trade negotiations have been challenging. The foreign, European and Chinese growth have been slowing somewhat. And so it just seems like a more accommodative stance is a good one for the U.S. I think what we've done already might be sufficient. I'm open-minded to suggestions that we might need more. At the moment, I'm going to be looking at the data.
Yeah, which data are you looking at if you're making your mind up?
Well, I think the inflation data is very important. We've had a forecast that inflation was going to, go up to 2% with momentum and go above 2%. My own expectation is that we should overshoot our inflation objective of 2% by just a little bit. That would be good because we've been underrunning it for a time. I think labor markets are going to be a very important piece of data to be monitoring. We've had good, very strong employment growth for quite some period of time. It's eased up a little bit, but still quite strong. So that'll be important to watch. The consumer's been really the important contributor to the U.S. economy, and the labor market's been important for that.
You're quite optimistic about the U.S. economy, I've read. Janet Yellen, though, is calling on the fact that they perhaps are too optimistic about the U.S. economy. So what do you say to her?
I have great respect for my former chair. I think that it's definitely the case that there's uncertainty around the outlook, and so I believe that at the moment fundamentals continue to be good. I think that there are headwinds that we are facing. We have reduced the federal funds target by 50 basis points, and I think that's helped move us into an accommodative stance more than where we were for sure, but I think that could be a moving target if headwinds are increasing and we might need to do more. I think the challenge, it's easy to sort of talk about headwinds and be pessimistic about where the economy is going, but it really ends up being sort of a non-linear adjustment. At the moment, it looks like we might be able to ride the uncertainties out, decelerate to trend growth, 2%, 1.75% in the U.S. The labor market would continue to be vibrant in that environment, but there might be more fragility, and if there's a shock that's completely unexpected and something that we haven't thought about before, that could lead to something not quite as positive.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.